Hello, everybody. This is Nathan, and I'm going to talk to you about this crazy market that we've been witnessing over the past couple of months. Ever since January, it seems that we've been in a straight downturn. Everyone's losing money, and in this video, I want to tell you what's happening, why it's happening, and I want to point out three different indicators that might be pointing that we're at the bottom of this market. So let's just take a look at where we're at first. Right here is the S&P 500. This is Vanguard VOO Index Fund, and this is the year to date. So this starts in January 1st and goes all the way down to today. And you can see that we're at a 16% decline. That means we're in a correction territory. 10 to 20% is a correction, 20 and higher is a bear market. So for the VOO S&P 500, we're in a correction, and we've really been struggling since the end of March, pretty much just going straight down. Getting most of the losses that we've seen has just happened in that short amount of time. So that's what the S&P 500 looks like. Let's look at the NASDAQ, one other index. That's here, right here. We're looking at 25.5% decrease. People that are invested into broad indexes, I mean, we're talking to the NASDAQ, we're talking the S&P 500, we're not talking about everyone putting 100% of their money in one stock or three stocks. These are broad, diversified funds, and we're looking at over 25% decline. A lot of people are losing a lot of money in this market, and it's scary. A lot of people are selling. There's a lot of fear and uncertainty. And the reason why this market has been dropping so much is mainly because of these three things. There are China lockdowns happening right now in major cities. Like Shanghai, they're in a complete COVID lockdown. So supply chain disruptions and shortages that we thought weren't going to last that long are seeming to be continuing. And the second thing is, how long is this Russia and Ukraine crisis going to last? Because it has been affecting us by the cost of our food, the cost of our energy. Whenever the cost of energy and gas goes up, the cost of everything goes up because shipping items is more expensive. And then one last thing that I've been seeing more recently, after last week's FOMC meeting with Jerome Powell, I've been noticing a lack of trust within the Federal Reserve. So let's look at the S&P 500 to look at that real quick, and look at this 1 month, let's look at this 5-day view. Last week, this is what I'm talking about. Jerome Powell came out and said, hey guys, so we're going to look at one more federal rate hike right now. We're doing a 50-point basis hike. So that's 0.5%. And he completely was confident and got rid of any naysayers that thought we might be looking at a 3/4 or a whole percent hike. People loved his confidence. People loved to hear it, and the stock market shot up right after Jerome Powell started talking. But after this shoot up, the market has just plummeting. It seems to me that there's a lack of trust with the Federal Reserve. People don't believe that the Fed knows what they're doing, and because of the other things that are happening around the economy, they think that we're heading towards a recession, and that even though Jerome Powell says we only need 3 50-point basis hikes, we think that there's going to be more in the future. So there's a lot of fear and uncertainty in this market. People do not know what's going to happen, and that means people are selling. And whenever there's a lot of selling pressure, there's a lot of volatility, and that creates buying opportunities. So what I want to go through now are 3 different indicators that show that it might be a good time to start buying. Let's go into this article right here that kicked off this idea for me. This is on the Wall Street Journal, and I'll link this at the bottom of this video right next to the like button. And you can click on this video if you're a subscriber to the Wall Street Journal and read through it yourself. So this is Markets 2022 slide has already changed investors' behavior. Basically what they're talking about in this article is that the slide down is making people not trust the market. Back in 2020 and 2021, everyone was buying that dip. If there was a slow, subtle decline in the market, people were buying heavy and we were skyrocketing straight back up. But now things are changing. So that's what this market's talking about. And I want to scroll down right here to talk about that first indicator that might show it's a good time to buy. So what we're looking at right here is the S&P 500 price per earnings or PE ratio over the next 12 months. So you'll notice that there's these two horizontal lines. One at the top, it's more bold. That is the 5-year average, the past 5-year average of the PE ratio of the S&P 500. And that's sitting somewhere around 19. And then the 10-year average is somewhere around 17. Well, since the COVID pandemic and the Fed lowering down rates and investing a lot of money into US Treasury bonds, boosting the economy, the PE ratio of the S&P 500 has skyrocketed to highs that we haven't seen in a long time. A lot of investors were scared. We're talking about high, mid-20s. But ever since this recent downpull over the past 6 months, basically since November of 2021, now we're below the 5-year average. So we've reached a 17.73 S&P 500 PE ratio. The last time it was this high was all the way back in 2019. I mean, we're talking pre-pandemic by a good margin. So what this basically means is the S&P 500 is 500 of the US's biggest companies. And the price that you're paying for all of these companies on average is cheaper. You're getting these companies at a cheaper price than you used to back in 2020 and 2021. And the fact that we're finally below that 5-year average shows that we're at a new time low, that it might be a good time to buy. So let's keep on moving. Let's go to the second thing. This is the VIX, also known as the volatility index. This index moves up and down whenever the stock market has volatility. So if it's a very volatile market and it's going up and down like crazy, lots of buyers, lots of sellers, that's a very volatile market. You'll see this huge spike right here. That's right whenever COVID was happening in March of 2020. And I want y'all to follow with me all the way back 2017, 2018, 2019. We're averaging in the mid to low teens. We had a couple spikes where it hit the 20s or whatnot, but on average, we're hitting those mid to low teens. After this huge COVID ramp up, there was a lot of fear, a lot of uncertainty, a lot of volatility, and it slowly over 2020 and 2021 started to lower back into those middle teens, almost pre-pandemic levels. Volatility was lowering, people were feeling more comfortable, but what's been happening recently, over the past 6 months, this volatility index has started to rise back up. We're all the way up to 33.4, which is the highest it's been in a long time. So whenever we're witnessing a volatile market, there's lots of buyers and lots of sellers. That creates an opportunity for us to find stocks at a cheaper price. So it's a very volatile market. That means there can be a lot of sellers and a good opportunity might come for us to purchase. And the third thing I want to show y'all that might lean to the economy saying that it might be a good time to start buying is this right here. This is the AAII, or the American Association of Individual Investors report. So this is really interesting. This report consists of 150,000 members that are part of this membership, and what this does is it polls all of these investors and asks them what they think the stock market's going to do in the next 6 months. Is the stock market going to go up in the next 6 months, or is it going to go down in the next 6 months? So historically speaking, the average that we witness, zoom in for y'all, is right here. 38% of the individual investors polled, of the 150,000 individual investors, 38% are bulls. They think the stock market's going up. 31.5% are neutral, and 30.5% are bearish, which kind of makes sense. Over a long period of time, the stock market does go up. There are more bulls than there are bears, and they're all relatively close. But I'm going to take point at this. This is what we're currently witnessing. This is this week's survey. This was released on May 5th. Right now, we're witnessing 26.9% bulls, 20.3% neutral, and 52.9% bearish. That is a insane, heavy bearish market. Everyone is scared and they think the stock market's going down. But you're going to ask, well, if everyone thinks the stock market's going to go down, how does this mean this is a good time to buy? Well, that's a little funny thing about the AAII report. So this report, there's a lot of people that say that even AAII says that this sentiment data can be seen as a contrarian indicator. So what that means is whenever a lot of people are bearish in the stock market, that means in the next year, generally speaking, stocks go up. And whenever everyone's a bull, everyone thinks the stock market's going to continue rising, that's when people are scared and they don't realize that the stock market's about to go down. So I'm going to point out this figure 2 and figure 3 right here. These both happened in 1990 and they happen around the same time. So there is a all-time low bullishment all-time low of 12%. Everyone didn't think the stock market was going to go up. And around this same time, we reach an all-time high for bearishment, high in bearishment sentiment. And what happened after everyone thought that the stock market was going down, there were no bulls left? Well, we saw a 25% increase in the next year. So those are 3 indicators that I want y'all to be thinking about. Everyone's a bear. We have the VIX spike, so there's lots of volatility. And then also the S&P 500 PE ratio says that it might be a good time to buy right now. Now, for all those people that are still sticking around, this is one little less thing I want y'all to be looking out for. Tomorrow at 8:30, the CPI releases at Eastern Standard Time. And that means if you're in a different time zone, Eastern Standard Time is in the orange on the right. It releases at 8:30 and Central at 7:30, Mountain at 6:30, and Pacific at 5:30. So be looking out for the CPI release. I have another video that talks about what we should be looking for that I released today on the CPI. So make sure to check that out. It'll be in the description along with the Wall Street Journal article that I talked about in this video. Thank y'all so much for watching. See you next time.